Welcome back to another stock market open. It's been a minute. It is good to be back. So this morning, the thing that's sort of making the entertainment rounds over the last 20 or so minutes has actually been Nick T's post, the Eremos. So we'll go ahead and take a peek at that on what we've got potentially coming for rate cuts and trying to find the right gear of rate cuts. I'll give you the quick synopsis of it. Basically, Nick T's piece is arguing that there are a lot of people over at the Fed who are like, bro, the stock market is at all-time highs, Bitcoin's at all-time highs. How could we possibly need to cut interest rates more? Obviously, you have that, the market dynamics of the market really soaring right now to contend with a somewhat slowing labor market. It's not slowing the way it was in September, but you've got negative readings in the households report. You've got a lot of government jobs coming in supporting the payrolls report. And so the unemployment rate's still rising, but still created somewhere around 140,000 jobs per month on average over the last 6 months. That level is lower over the last 3 months. But markets are now pricing in a 97.5% chance of getting a rate cut this week. So it seems like what we're probably going to get, may as well write this down. Let's see here. Let's do it like this. Seems like what will probably happen, we'll sort of say Fed game plan. What we'll probably see is something like 25 BP cut, then a somewhat hawkish summary of economic projections, since we get that again. Now, these are generally not ridiculously reliable, but they're used as a messaging tool to kind of coax the market in a certain way. Now, a concern that I have is, so I'm going to put one concern is rates, after the Fed cut 50 are up, what are we up, 70 basis points? These are market rates. And so if you combine the 75, 25, 25, Fed basically cut 100 BP, but market rates up 70 BP. It really means you're kind of still restricting the economy, but you're in a place where that's being sustained by market euphoria. So market euphoria is propping up the economy in the face of higher rates than prior to the Fed cuts, right? So really, you want that to keep going. Obviously, you don't want to see any kind of market correction, because then you'll be stuck with the worst of both. Market correction equals worst of both, which would be lower asset valuations and high market rates. But the Fed also doesn't want to, in their mind, reignite inflation by sort of pushing for this vision that they're going to keep rapidly cutting. So SEP probably has to cold water a lot more rate cuts in 2025 to prevent a ramp up of services inflation. You've seen some firming here in just the last data reports. Some firming. It's going to be something that comes up. It'll come up. So I think their calibration will be a lot of wait and see. I kind of expect Powell to say that, wait and see. And remember, the Fed can cut really rapidly too. Remember in 2007 what they did. In 2007, you had the 50 BP cut in September of 2007. It was the same date as it was in 2024. I think it was the 18th. And then by January, you started getting emergency cuts. We don't see, it doesn't seem likely that we're going to be getting that unless there's some kind of major oopsies. So it seems substantially less likely. But who knows? I suppose anything could happen. Okay, good. So with that, we've got, what do we have this morning? We've got MicroStrategy issued some more stock to go buy some more Bitcoin since getting included. Actually, it was right before they got included in the NASDAQ. You got Supermicro got booted out of NAS. Palantir MicroStrategy got taken in along with one other. I forgot who it was. There we go. Okay, we got that ready. I'll look really quickly. So who was it? NASDAQ 100 editions. I know it was MicroStrategy and Axon. And Axon Enterprises, the maker of tasers. Oh, wow. That's awesome. Illumina, Supermicro, Moderna removed. I wonder how that stock's been moving. Axon. Oh, wow. Yeah, look at Axon. This thing's up 150% on the year. And if you sort of zoom out its max, geez, look at that. It's just exploded. They also make the body cams. So I wonder if it's not just tasers, but also body cams. I wonder what their financials are. Let's see, we got a few minutes before the bell. Let's go to Axon, third quarter, all results. Shareholder letter. No, I really want the SEC filing. Okay, where is it? Financials. Quarterly filing. Let's see what's so snazzy over here at Axon. Axon, apply directly to the forehead. All right, so we got net income. Wow, a lot of service and product revenue, which is great because that service is high margin. I mean, that's like 75% margin, which is great. Income of $67 million. What's it trading for? It's a $49 billion company. Let's see how much cash flow they've got. Cash flow, somewhere around $100 million of cash flow in 9 months. So 100 divided by 9 times 12 puts them about 133 in a year. Yeah, but compared to this market cap, that's kind of crazy. That's not that much cash flow. Oh yeah, that's like less than 0.25% going to free cash flow. And what do you have on EPS? 89 cents. This is for a quarter, so what are you, close to $4? And this thing's trading for 644. And if I do 644 divided by 4, it's trading for 161 times. My lord, what has happened to the market? That seems crazy. I mean, I didn't think they came out with some like super taser or something, eh? Yeah, okay. I guessed just annualizing about $4 of EPS. The market has them at 524 for December. So 644 divided by 5.44 puts me at 118 PE ratio. And their forward EPS growth is expected to be 20, 23.5, 14.24, 25.45 divided by 4, 20.8 on average. This thing's trading for a 5.6 peg. Wow, that's kind of crazy. That's a pretty high valuation. So not super ideal, but I'm gonna write that down. Axon, what I say, 5.6 peg ratio with 20% growth and 118 PE ratio today. That's just nuts. But there you go. Although I think Palantir, because now that's like $77, also getting into NAS. Their end of year is 38 cents. That's their forecast. $76 divided by 38 cents. 200. Wow. It sounds like they're getting into aviation. 200. Okay, Palantir. Wow, that's crazy. Palantir 200 PE at 38 cents. And then if I go look at their average growth, it's about 22%. So 200 divided by 22. Bro, I don't think I've seen pegs this high ever. A 9 peg? Oh, jeez, man. Wow. What a market, eh? Okay, here's MicroStrategy for you. Oh, TLT is coming back to touch the Powell line. This is the Powell line right here, the 89.65-ish to 90.65. And the Powell line has you at a retest point right now, where I think you're kind of in a little critical spot here. If you retest here and bounce, it's a good sign. But if you get a summary of economic projections here that ends up poopy doopy, well, then let's just say it's gonna suck, because you don't really have a support again until you get all the way down there to what is that, 79, which is crazy. But the support where currently is pretty strong, so we'll see what ends up happening there. Okay, let's see here. Okay, that's on. What do we got? CNBC's on commercial. Let's see. Okay. Trying to see if we have. Let's go with. Try to see if the Doomers are up. We got about 3 minutes to go until the bell. Okay. Nope, they're all on commercial today. Okay. Oh, wait. Is that the right place? It's been so long since some of these have been used, these channels. What does that say? Oh, oh, there we go. Click. There we go. Okay, yeah, they're on commercial too. I feel like that's like pretty common these days. They're always on commercial right before the bell. Okay, so what's moving into the opening here? Well, you got Tesla moving again, 132. I had a line at 414, but wow, it just like blew past this line. It did test it though. So if you look at my 414 line, we broke through 414. The next day, we actually came back to test 414.50, which we also tested again on Friday, right there at the open. And now we're sort of escaping 414, which is pretty good. That's a pretty good support right there, 414.50. Watch that one in play today. And then let's take a peek at the Qs here. What do we have? Yeah, Super Micro back to the low 30s, which is wild. Super Micro, you had, what was it? Yeah, here it is. I bought this around like 23 bucks, and it ran to $50. But boy, look at that. It gave it all up again just in the last, I don't know, 3 or 4 trading sessions. Yeah, look at that. That's crazy. It was all the way back up to $50 from 23 to 27, up to rejected at 50, basically, 49.86. Sort of bled out there a little bit. Talk about fundraising, talk about getting kicked out of the NAS. Probably a day it's got to really recover from. We'll see if 30 holds. Okay, so what else? Then 1 minute to go to the bell. Oh, let's see here. Okay, let's listen in over here.
Where the cost of fixing is way too high, and parts have gone up huge during the COVID period. So that's a very tough call to afford. Very tough.
Still have it as a...
No.
You got rid of it, right?
We got rid of it. No, because I couldn't take your ridicule. The ridicule got to me in Boeing at 240. So far, it's been 2 for 2.
Let's get the opening bell here in the CNBC Real-Time Exchange. With the big board, it's MFS Investment Management celebrating the launch of 5 active ETFs. We'll talk with Micro Bears in about half an hour. At the NASDAQ, NetClass Technology, a provider of education software in China, celebrating its recent IPO. By the way, retail sales in China, 3%. Estimate was for 5%.
I remember during this period where we had stagflation. Now, they don't have a lot of inflation, but we've been getting these numbers and start worrying that maybe we have to start printing money to get things.
It's a pretty enthusiastic crowd out there today, huh? There's a lot of excited cheering. But hey, look, it seems to be working. I mean, if you look here, you've got a good move there on the Qs right at the open. Let's see here. Yeah. Okay. Okay, there we go. So 59 basis points on the Qs. Oh, you got a recovery there on Super Micro right out of the gate. At least somewhat of a recovery. Coinbase pops up to about 320. That's an important line right here. Watch that 320 line. I've seen Coinbase play 320 a lot. We've covered that one a lot. So if you're trading Coinbase, watch that 320 line. I'd say I generally see it reject off of 320, but let me see where it tries to go. 390. I have not seen 390 in quite a while. Yeah, no, not this cycle. So looks like more recently it's been getting rejected somewhere around close to 350. So 320, this would be nice to see a breakout over here on coin. Not a lot helping you out there, though. A little bit of a harder bet. Tesla's still holding on to its 1%. You've got Palantir down a smidge. Look at that. It actually got up to $82 there for a period of time. MicroStrategy, 425. Yield curve's positive right now, about 15 basis points positive, which is kind of remarkable. I mean, really, if you look at the true pain that you usually see is around that 50 to 90 basis points of inversion. We're not anywhere close to that, which is great, which is really, really good. So you want to watch for that. And we're just not close to that sort of market correction level, at least at this point. It can come very quickly, though. Somebody here is asking about AMD. Let's see here. So AMD is down 2% again. Yeah, this is kind of remarkable. I mean, if you zoom out on AMD, and Qualcomm is sort of this mindset, or not mindset, of this disposition as well. And look at this. If you look at AMD, year to date, AMD is down 10%. Not even green. It's down year to date. Year over year, it's down 10%. Past 5 years, it's up. Last 6 months, it's down 20%. So AMD is really getting hit here. But it's not just AMD. Look at QCOM. Qualcomm year to date is only up about 11%, which, it's fine, but it's just not what you're seeing in some of the other AI stocks. I think Google, after Willow there, had a nice pop finally, because Google was getting stuck there for a moment. Yeah, see, look at that. You were kind of stuck there at the 169 level for quite a while. Giggity. And finally broke out there on Willow a little bit. I remember Bitcoin had like a brief heart attack. It went down to 97. Who cares? Big deal. And that was last week on the Willow announcement, and then just bounced right back and broke the all-time highs. But yeah, the AI sell down. Look at this. Apple basically here. What are we at 250? Whereas you've got, which is great. Apple finally got out of the 230 range and made it to 250. And at the same time, you've got NVIDIA also trading down. This is quite interesting. Just sort of capping off over here. It's not really participating in some of the gains. By the way, look at Bitcoin. Look at this flag. If you zoom out on the day chart, look at this beautiful flag right here. And it's even a little easier if you see it right here. There you go. Flag breakout. Now, sometimes you'll actually see a retest down to the top of the flag. So I would have these lines marked. I might even consider extending these flags, right? Just something like this. Just as I don't know if they'll ever come in handy, but just sort of as a future tool, something like that. Because it's not uncommon to see a retest of a flag. It's not guaranteed. It's not necessary, but it can happen. Here's actually a little micro example of that. See, look at this. You got a little bit of a flag right here. You get the breakout, and then you have the retest. I should have dragged this out a little bit. You get the retest right here. Well, all right. What else? What's the news today? In phase $72. Oh, look at that rejection at 75. Yeah, I had a feeling there was a pretty strong line at 75.80. I thought we'd break through it, but it has not broken through it. Ooh. Tesla, look at that. Popping off right now. Almost 2% here. Yeah, that puts at 444. Lots of fours. 105 on BTC. Nice. Oh, look at that. I think, what was our all-time high? 105,400. We're cranking for it right now. $400 away. It's like a sneeze away. But it's interesting seeing NVIDIA sell down at the same time. Some of the AI plays. Yelp's had a good week and a half or so. Almost at $40, just like Robinhood. All right. Let's see here. Let's see what they're saying.
It's all right. It's okay. People are busy. Nobody in my family, you know, it's okay.
It was big for me. I guess, what do I have to do? Interview Lincoln? I got Lincoln on the phone.
That'd be a good get.
That I would watch.
Lincoln's a tough guy.
I hear Sorkin got him, though.
That's it.
Yeah.
That's it with that thing.
Yes.
I'm done with that. We're not taking that next year.
He had Lincoln.
I'm not taking Lincoln.
He had Lincoln at
No, we're not taking Lincoln.
Oh, Ellis here in the chat's going to be closing on his first home by the end of the month. That's awesome. Yeah, congrats. It's interesting. I've got I've been working a lot on the Trumponomics course, and it's really like the stuff we're going to talk about. That is, it's pretty incredible. So I'm pretty excited about that. I'll share some more details soon on that. But anyway, it's pretty awesome. So stay tuned. And it has we'll touch on a lot, including real estate.
I don't know, Jim. Come up with your own.
YouTube. YouTube's doing incredibly well.
Doing amazingly well.
It's doing incredible. And they got the NFL right, by the way. That was just a brilliant move. They don't talk about it.
YouTube TV raising its price, the MVPD to $82.99
Well, you know what it's really about? Come on, let's know what it's really about. We had someone in the Justice Department, Jonathan Cantor, who was hoping to take this company and turn it into a Greyhound bus.
Common carrier.
You don't think this is about
Okay, let's flip over here.
Over the next 12 months for the best 12-month return, where is it going to be? Because even if you're bullish on all of these themes, you've seen quite a run up already, and you have investors scouring the globe for the next set of returns.
Yes, but let's all be honest that when we look at the earnings side, for example, so that's one of the things why we are relentlessly pushing back against this sort of bearish narrative that valuations are too stretched. Number one, valuations don't work on a short-term basis. So when you look at some of those names and people say they're too expensive, it's had this massive run-up, like you're saying, well, actually, when we look at the likes of NVIDIA, you know, the PEs have barely changed over the last 2 years, simply because actually earnings have really been continuously delivering, and therefore we've not really seen valuations go through the roof. In fact, and you look at NVIDIA, free cash flow has gone up from what, 5 billion to more than 55 billion. So it's literally gone up 11 times over the last 2 years. So we're seeing such an incredible run up, not only on prices, but really on the underlying fundamentals. So to be honest, like we're going into the next year, I think, particularly in the next 6 months, it's a bit of a story of more of the same. It's still tech. There are some other certain sectors, right? There could be stuff like perhaps even on the industrial side, things like perhaps on healthcare, playing the deregulation. I still really like the banks, particularly the large US banks, absolutely. But you won't be able to ignore tech. You won't be able to come around tech. You won't be able to really say, oh yeah, this is done. The Magnificent Seven, we're done with that run, and we've got to rotate entirely out of them. I don't think that's going to work because the fundamentals are so strong.
One of the risks you were talking about, and certainly a lot of investors are starting to bake in, is that kind of higher for longer narrative when it comes to the interest rate story. So what level of rates, how do you think about that number, the golden number, at which you start to get worried? Because the market has shrugged.
I don't think this guy's ever going to say anything about being worried. He sounds really bullish on everything.
Yeah, I think for the market, it's pretty binary. So for the equity market entirely, it's actually pretty binary, and so it is for spreads. As long as the Fed still keeps cutting, it's still good. So if we're still going to get, hey, 1 or 2 rate cuts, maybe spread out over 6 months, the market can take that, right? We've seen that time and time again in the last sort of year and a half. It's only the time when the market starts pricing in sort of a big wedge in terms of rate hikes. Now, what's the magic number right now? In our models, that's 4.5%. We've got this thing which we call the danger zone, which basically sort of models the level of longer term and medium term rate expectations and the level at which basically all asset classes would start to suffer. Not only the S&P, not only equities, but high yield spreads, emerging market spreads, high beta FX, literally all the asset classes. What we're seeing right now is that level is pretty much almost exactly 4.5%, just like we've seen that a month ago. Remember, a month ago, we had a tiny whiff of that already when we were sort of almost touching the 4.5%, and that was starting to put a bit of pressure on asset classes. Right now, if we're pushing sustainably above the 4.5%, I think that really would bring us a bit into trouble.
We're going to keep an eye on that 4.5% danger zone. HSBC Chief Multi-Asset Strategist.
Whew, that was a little exhausting. Anyway, okay, let's take a look at some things here. First, Tesla's about to hit 450, which is awesome. I think they're going to beat on earnings as well here. But even if they do, even if they give us $2.50 of annual EPS here, it's 450 by 250. We're looking at about a 180 peg, which we've seen it trade there before. If I give it 30% growth at 180, Tesla's trading for a 6 peg. That's probably the highest I think I've seen it trade like ever. Its growth will have to be substantially greater than that to justify that. Even if I go back to the old days of 50% growth, 180 divided by 50, it's 3.6 peg. That's still too expensive. That's crazy. I mean, you'd have to assume right now the market's basically pricing in. If I give them a software valuation, they're pricing in about 69% growth. Let's go. So think about that. I'm gonna write that down. Tesla market seems to be pricing in about 69% annual growth over the next 4 years in each year, with the stock then trading for about a 2.6 peg. Otherwise, at 30% growth, it's trading closer to a 6 peg. That's wild. That doesn't mean it's going to stop anytime soon. It's just interesting from a valuation point of view. So what do we have here? You know, another thing that's interesting is if you look at small caps, you're basically facing this double rejection here at this 236. So I'm watching this as well. IWM, which is your Russell 2000. You've got second rejection at about 236, which isn't, it does send some underlying signals that, hey, it's like not everybody is winning here in stock selection. In fact, if you go to, I think it's CNN Greed and Fear. So if I go to CNN Greed and Fear, yeah, look at this. This is kind of wild. Okay, ready for this? Look at this. So it has us at neutral. Market momentum is at greed. That's because the S&P 500 keeps going up, right? But look at this. Net new highs and lows. We're at least via their metrics here, extreme fear levels of net new highs and lows. Let's write that down. CNN greed and fear. Greed due to S&P 500 rise. However, extreme fear with ratio of new highs versus lows. I should say instead of with, I should say based on. There we go. Okay. Then you have, look at this, stock price breadth. So the amount of stocks individually gaining versus losing. Extreme fear based on winners versus losers. This is a quantity measure, right? Put call ratio. This is at greed because it's really cheap to buy protection right now. This is the lowest. This is the cheapest protection has been since like July 11. Cheapest level puts have been since July 11. And then what do we got here? Market volatility, neutral, safe haven demand, greed. So little safe haven demand, little interest in the stock and junks as well. Yeah, kind of interesting. Because you look at a lot of stocks. Wait, how did Palantir just go from positive 1.2% to down 2.3%? What just happened? Did we just get data? Hold on, that's weird. We did. Manufacturing missed, services beat, composite beat. Okay, I mean, but that shouldn't really affect Palantir. No, this is somebody just sold, is what it is at Palantir. Because this is, I don't think the market moved at all. Yeah, the S&P numbers didn't move anything. I mean, that's not a big deal. All right, interesting. And something else that's interesting too is if you zoom out on the day chart for NVIDIA, you're kind of at the same levels you were in June. Just kind of getting stuck there. Getting stuck below the June levels. AMD, obviously, we've just seen a straight bleed. There's TLT. Let's see what else is going on here. Tesla. Tesla was almost there at 440. Just gave up a bit. Well, somebody's taking some profits. Hey, but Bitcoin, I think, just hit all times. Let me see. I think it was 105.8. 106.5, actually. Oops. A little bit more to go. Very interesting. Okay, Robinhood 41 finally broke 40. We've been watching that in the alpha report for a while. Looking for that to break 40. Okie dokie. Oh yeah, Disney started bleeding again a little bit after their McDonald's over 300, but Disney started bleeding again. I think it's at like 112 now. Well, I like Disney. Yeah, 112.59. All right. Interesting. Let's see what some of the suits are saying. Marshall Henry donated $9.99. Thank you so much. Yeah, there's a little glitch with eHack right now where I'm not able to do updates. So as soon as I get that fixed, hopefully today, I'll be posting a lot on eHack again. Now I'm back. Okay, Loonie hits fresh pandemic low. The Canadian dollar just hit a low. Weaker S&P 500 performance looks set to come with inauguration. Okay, let's see. U.S. yields moving after the PMI data. Big deal. Okay, that's not really news. This is boring. I need more coffee to keep me awake if this is all the news they got. SoftBank CEO to announce $100 billion of investments in projects. Yes, this is what they did last time when Trump was inaugurated too. No. Okay. Let's see what else. What, do they have anything over here?
It's been stagnant and accelerated. And it's accelerating in all different ways, whether it's marketing, whether it's product, whether it's expanding your customer and using.
Look at that. We got a green screen and wired headset.
Speaking of transformation, one of the big ones we're watching, of course, is Starbucks with a new CEO with a lot of hopes on him. You have this morning a report also saying that they have somebody now to lead their China business into kind of choppy waters, of course, into the country. You're still seeing Starbucks shares down year to date about 1.8%. How big of an issue is China for Starbucks? How important is it for Brian Niccol to crack the code?
Very important. It's obviously they have a significant number of stores. Brian Nichols' success at what he did at Chipotle, being able to overlay that with what he has in Starbucks, be able to take the installed base of associates and frankly transform them in order to build a winning culture will be key. And I think all the different regions need that acceleration to drive the transformation.
Let's also talk about Nike, which reports.
All right. So Marshall Henry here says, assuming bearish on QQQ, which is a better strategy, puts on TQQs or calls? Options are tough when if you want to hold them for a while, just because you're paying a lot for decay. If you're going to hold these for a while, if you buy the options and the market starts tanking right away, you're great. Congratulations. That's wonderful. But shares are kind of interesting because of that. But let's look really quickly. I mean, if I go look at, some 95-day puts, calls on SQQQ, I've got at $30, I've got about 2,200 sets of open interest. Let me then go to TQQ. Let's go out to the same, except here we're going to do puts for March. Yeah, looks like in this case, substantially less open interest. Oh, hold on. There we go. I got to get to scroll up to where our money is. Yeah. It's the same issue here. So you have less than half the open interest in this one compared to calls on SQQ. So it seems like calls on SQQQ are going to give you some more liquidity. That just means you'll have tighter spreads over here between the bid and the ask. Here you got about a 5-cent spread, 3-cent spread. It gets ugly when you have very little. See over here, it's like a $4 spread because you have almost no open interest. Yeah, that's not ideal. But again, it's tough to make a longer term option bet unless you're willing to really hodl long. And then you have some kind of longer term option. Okay, so yeah, Palantir's now down 3-4. A little bit of sell pressure over there. Tesla's only up about 40 basis points now. It is just typically just driven by somebody pressing the sell button, right? All right, very well. So we got to head over to the course member live stream. Appreciate you all being here, and we got some analysis to do in the course member live stream. So we'll see you all over on the course live, and then Trumponomics releases about tomorrow around midnight. So a lot of work to do between now and then. But anyway, thanks so much. We'll see y'all soon. Goodbye. Good luck.